Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And roll top fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Hey, we got a day ahead of us. I don't know what else to say. How to introduce this? We got some critical economic numbers coming up here. U.S. ADP employment change was 128K versus an anticipated 300. So that's not very good. That doesn't speak to that it does not look good for what we might see with initial jobless claims here in 4 minutes. Coming over to the charts, though, S&P 500 took quite a dive yesterday as yields just increased like Mondo time. But it does look like this ADP is maybe causing the bonds to back off a little bit. So we're kind of in this bizarro world of bad news is good, good news is bad again, right? Oil taking a hit. There's a lot going on with OPEC. Some suggestions that there might be some more supply coming. So that's why oil is just all over the place right now. Natural gas rising here. Gold and silver starting to recover yesterday's losses. Coming back to kind of like the moving averages. And Kappa's taken off. Look at that. Ooh. This is curious to me. I need to look at that. What's going on there? And then we got Bitcoin taking another hit yesterday. All sorts of crazy things going on over there in Bitcoin. It looks like Celsius is still kind of like strained, and there is let's see here, the top NFT marketplace CEO is being sued for insider trading and all sorts of crazy stuff. And then we got the dollar taking a big jump yesterday. A lot of that retracing this morning, though. So we've just got stuff all over the place. So given what we had with the ADP, that puts us in a pretty tough spot with the treasuries. Man, if we got like 2.9 though, that wouldn't be so bad. 0.9 wouldn't be so bad if we wanted to go long rates here. A lot of volume, but market not moving. Well, I mean, the treasury is moving. I suppose the S&P 500 is not moving as much, but I think that you're probably going to see that they will move here after this news. Keep in mind that we are going to get OPEC stuff today, so oil is probably going to be pretty wild. We're seeing a big jump there in the last 30 minutes in oil, so well, the liquidity here ahead of the news isn't terrible in the micros, but I'm sure you're going to see those all cancel here in the next 30 seconds. Let's see here. For the initial jobless claims, our estimate is 210. But we're also getting labor cost revised, and that we're looking for a reading of 11.6. That would be one that probably matters, productivity and labor costs. Okay, so it's 200, lower than the forecast, but not crazy. So interesting. It looks like they are going to bid it up here, huh? I don't know. So lower than forecast is weakness. So typically that would be a positive for the treasuries. We're kind of in this world where I'm not sure. I the numbers definitely matter. I'm not going to say that the numbers don't matter, but it's kind maybe one of those situations where you lose either way. You know what I mean? Like you get a good number, it's bad. You get a bad number, it's bad. Because I think the thing that I see going on over here in the treasuries is that the strength of the economy is not the thing that's really moving the treasuries, right? What's moving the treasuries is the inflation because we're looking at a situation where the Federal Reserve is hiking rates into a weak economy. So, this is where, some of these numbers might not be as important. So US productivity revised negative 7.3 versus an expected negative 7.5, and labor costs revised were higher than expected at 12.6 versus 11.6. So I think that you could see a little bit of a rise here in the treasuries. We'll see. I'm gonna try messing with the robots here to see if we can bring the spread in. Okay, well, no fill, but they did move. Quite a bit of backwash on it too, isn't there? Hmm. So volume here. After all of that news, I mean, they are pushing in the right direction, I think. But the actual volume in the treasuries so far is relatively light. But I do think you could see some acceleration here. Yeah, look at that. There's actually quite a bit more shuffling at 26 than I thought there would be. So a little curious. I'm not necessarily seeing like a clear uh strain on the liquidity in this location, but something's definitely going on. And it refreshes very, very quickly. So it kind of looks like somebody is buying there. But look what this volume here in the 5-year. Look at that. Okay. Okay. Well, I've been leaning towards taking the rates long here. And they did come down to the lower end of this really easily. And the flow has been mostly negative here in the Treasury since the news. But this latest little swing up has been accompanied by quite a bit of volume in the 30-year. And I would say, I'm not going to say that it contradicts, but I'm going to say that it is not supportive of my theory. So 28 is kind of like where we were before the news and everything. It kind of looks like it's balancing out here. So I'm wondering if the range is 26 to 28 or if the range is more like, 27 to 29. Well, there you go. That's a little bit more. And it comes back there very easily. Okay. Well, I don't think I'm going to get filled on limit, so I decided to take 2.93. It's not like the most favorable entry, and the spread I'm paying up pretty heavily for the spread, but I'm kind of intending on holding this for a while, so I guess we'll see what we get. Have to be cautious here because we are getting some movement here in the dollar, right? The dollar's kind of all over the place. Hi, Tobias. So the curve here, the yield curve has whipsawed back and forth here quite dramatically. But off of this uptrend, we're getting a pretty clear uptrend. Or sorry, we're getting a pretty clear steepening. Why did I say uptrend there? Words not coming out of my mouth. That's not a very good sign for me today, is it? So remember earlier I was saying, well, maybe the range is 25 to 27, but maybe it's 27 to 29. And right now it's kind of looking like it's 27 to 29. Now they could come back down to the low end of this really easily, right? It's quite slippery, but at the moment it doesn't look so good for me. You're so bullish. You think they're making a base for a move higher in ES? I think that what we got yesterday was a pretty significant change in the markets. So I think that it's still a little bit tepid because you got really big economic numbers tomorrow, right? But I am leaning towards yesterday being a pretty significant turning point for markets. One that would result in higher rates and lower S&P 500. See, this isn't so good. I'm looking at like 2.92 and I'm like, oh, that would have been so much better, right? It's not, you're not really getting volume on this. In fact, the 10-year continues to sell. 10-year continues to sell. 5-year is selling. The 30-year is the only one that you're really seeing significant buying in. But it may be the case that the dollar is the most significant factor here. And at the moment, the dollar is kind of falling. The 6J, it hasn't really moved. Per source, OPEC deal would bring September 400K lift into the July and August plus a bit, so extra 230 to 260 for 2 months. Russia was informed, meeting in July to iron out future policy, win for US and Biden, caveat OPEC discord could stop deal today. So there's still quite a bit of tension over there in OPEC. That headline though would suggest oil lower though, wouldn't it? Although I think that was why oil was declining yesterday. Don't know what's with this rise here this morning and how that's sorting out with the news. But I'm not an oil trader, so I'm just gonna let them work it out. Let's just keep in mind that oil is still sorting things out, and that could affect us in the treasury. Let's see here, Tobias. Okay, yeah, possible. I bet against it. For me, the market is still super bearish, and that's a reason to go higher because it causes the most pain. Well, we just got it. So short covering, like that's kind of what that sounds like you're saying to me, right? Is like that going higher causes more pain than the thing that you see that could create more orders is the S&P 500 moving higher, right? Okay, so I'm getting some favorable excursion now. But again, well, okay, this time we saw a little bit more solid selling in the ZB, although it did not take very many. It did not take very much to take it down there. Look at all that. It was pretty light pulls. I think that, well, actually the 6J is still just kind of sitting there. So I don't know. I don't know. They came down to the bottom there so quickly. There was a little bit of trend going with it, but because of the volume, um, you know, when you come up to a level and there's really strong momentum with it, right? You're much more likely to bust through that level. But I'm not seeing that here. What I'm seeing is a really slippery market that is able to trade across the entire range in the treasury. But I am seeing the dollar rebound. The Hill says census blunder may tip 2024 to Democrats. Oh, really? Because when I heard about that, last thing that I heard about that was that it was kind of a little bit of an error in favor of Democrats, but that it didn't really make a huge difference. Okay, so see, back to 28 very easily. All members of the JMMC are in agreement with regards to the recommendation, which will shortly be reviewed by the ministers. Yeah, back it to the highs. It's still steepening though. It does look like the steepener is winning out in the spread so far. We had an up move, a down move, and back up, and it's still getting steeper. Like now we've got the 30-year almost at its lows, right? And the 10, 5 and 10 kind of on the higher end of the range. I wouldn't say like at the top, but this kind of the really slippery back and forth is really not what I expected today. Look, the 30-year ticked down. They're all pushing up there, and the 30-year ticked down. It looks like the 30-year is gonna. Oh, maybe not. Let's recenter the 30-year there. Now you could say that the 10-year is at the high end of its range for sure, right? Although the volume is still not it is still pretty all over the place. And I guess with that, the dollar erased a little bit of its recovery there, and the 6J is at the high end of its range. So a few downticks there, but they're not really super solid ones yet. Like the offers aren't that great. Okay, there's a further downtick. Like I'm not seeing like the offers stack super aggressively when it ticks, so that kind of looks to me more like just more correlation trading and stuff. And the 30 years is only down one tick from where we were. So well, it is kind of starting to look like a consolidating range higher in the 10-year. But this is very different. It's very much a steepener I'm seeing here. And the 6J just took a tick up above the range there. So I think wow. The polls in the micro aren't very good, are they? They're going like 5 ticks at a time. Yeah, I'm not really seeing a whole lot of activity across the board except for the dollar. The dollar is definitely the thing that's moving right now, right? I'm not too sure how big of a deal that move in the dollar is. Yeah. I mean, it's down like 10 cents, right? So it seems like an aggressive slip to me. But like the treasury is not reacting that strongly to it. The 6J moved up, right? Like the on that move, the 6J moved with the dollar. And but the treasury didn't really react to it, which I find a little odd. Hmm. Okay, so there was a little bit more significant volume in the 10-year there at 2.9 There's some sort of an iceberg coming through here, but they cleared it. Yeah. And that downtick was a little bit different. Did you see how that on that downtick at 29.5 the offer loaded up and was more than the bid at 29 almost immediately? So that's a little bit better sign for some turn down, but it's just a very tiny tea leaf, right? Also, a curious large offer placed at 29.5. Hmm. This back and forth is frustrating. It's a little I mean we have seen action like this recently in the treasury, but not this bad, right? This is really like they've gone across this range. 1, 2, 3 times now. Up and back down 3 times. And all of it has been like on relatively low volume. That trade at 118.29 with the 3K iceberg getting sliced through it was probably the most significant volume of the session. And you got a bid, a relatively large bid at 27.5. So well, okay, they tick down and like all of that cancels. So I don't know if that actually means anything at all. And the 30-year looks like it could tick new regular session lows. I don't know. Yeah. Okay. So they pulled again at 27, and that time 800 immediately hit into it, and it clears, and now another tick down. So this downtrend is looking a little bit better, but I wouldn't say I'm getting the super strong signs that it's going to come all the way down here. We are getting a bounce in the dollar, so and the 6J is coming back into its range. So at the moment, what I'm seeing is like a fake breakout in the Japanese yen, and a little bit more interest in the treasuries on the downside through this downtrend, but still a very slippery market. The Hill says Biden was not aware of the infant formula crisis until April. Of course not. He's never aware of anything that's going on until it's a problem. Jump on the long train? Wait, which train? Long ES? Long micro treasuries? Okay, so now we got them all lined up at the lower end of the range, and the setup I would say for lower looks way more solid than it did for higher when we were up at the top. I tell you what, it sure was nerve-wracking for me though, holding this trade. and even now I'm still watching it and I'm saying, okay, this could collapse, but it's still kind of looking like it's playing games with me. That 30-year looks so heavy. Also, some of that steepening unwound on this down move. It's usually been a mess before equities open. Yeah, well, that's what I was saying a little bit. I think just before you stepped in was like, this back and forth across the whole range is something that we've seen relatively recently in the treasuries, but this time around it seemed particularly frustrating, right? It's like the treasuries look directionless and they're just chopping across the range based on correlations, and it can tick up or down on almost no volume. Hmm. Okay, so there looks like there might be a robot buying here at 25.5. Ouch. Like buyers were starting to dig themselves out, and then it just ticks back down to the low. Tick tick. A robot. I don't think that was the kind of robot that you would see very well with um Bookmap. It was like a machine gun. You know what I mean? It's like a consistent trickle of orders going into the price, like 2 or 3 at a time. Not really seeing it now. Now you're just seeing the tick back and forth, and there could be somebody accumulating in that area, but it's pretty hard to tell without being able to see, who's responsible for every order. I guess why that's relevant is because there seems to be a node down here at 25, a node at like 27, and a node at like 29 half. And so just kind of means we could chop around this a little bit. It will take a little bit more forceful market selling to push us down below and get me to 23 half here in my 10-year trade. Okay, so S&P 500 is starting to have a little pickup in activity. We are at the top of the hour when the equities traders start to come around. It looks to me like they're not very happy about what is happening in the treasury market right now. Yeah, like that was a sell right there. I'm going to be very curious if the dollar here like bounces all the way back up to 102.2. Okay. And so once again, they tick to the low. We get more volume hitting 24 half this time. It is a smaller bid than the offer, but you're not really seeing volume hit it yet. That was a new low in the 30 year. So the 30 year continues to be very heavy. Okay, there you go. Not as much liquidity at 24 half as you would like if you were a buyer, right? Maybe at 24. $7.28 has gotten into it and it didn't tick down, so what I'm watching for is there's going to be a spot down here that there's some liquidity, right? And then do the sellers push through it? Right now, looking for a sign that there is indeed a meta order sell. But what I'm seeing so far is still kind of suggests correlation plays. Maybe there's a meta order in the dollar, for instance. Okay. So 867 that time. 1,000. And spoos really, I mean, this market is, the S&P 500 was so dead, and that market is really coming alive here, isn't it? By the way, not really seeing anything in oil yet. Sheesh. Sheesh. Eh. I wish that this spread here was not so wild. Yeah, okay. So the robot's not really responding to me putting that order there. I don't know. I'm gonna hold that one because I'm just this ranging and everything is just driving me nuts. I kind of want to relax a little bit. Hmm. And the dollar is kind of moderating it a little bit again. So I'm not like I got a good move there, but I'm not getting the signs that there's a really strong sell meta order in the treasuries like I've been anticipating today. So, like my larger theory here has been that we had a pretty decisive change in the treasury market yesterday, and that you're going to see more selling, and more selling in the treasury could lead to some puking because there was people willing to buy the treasuries when yields got above 3%. So if treasuries start making a more meaningful push, that that's not going to be very good for them. Push it to yesterday's close and move on from there. I mean, yesterday's close was right about where we're at right now, right? What we're seeing right now may just be the blah 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 blah. It may just be flight to safety coming in because the S&P 500 seems to be selling so aggressively now all of a sudden. Although I also kind of feel like that the S&P 500 didn't start selling until the treasuries came down to their lower end and started pushing new lows, right? So that selling in ES may moderate unless there's a piece of news out there that I'm not picking up on. Would really like this to see this spread in the 10-year be a little more reasonable. Because when it's like that, it's really hard to get somebody to hit you with a limit order, right? Biggest mover at the moment this morning is NQ. All of the indexes higher than usual volume, followed by gold, which at the moment is moving up. Hmm. Wow. It's like it it seems so difficult, and then tick down at 250 with only 26 lots. When I see a tick like that, like my heart just drops, even if it's in my favor, because I can just imagine being the guy that had bought it at like 25 or whatever, right? I was like, kind of getting it. It's kind of difficult, and then all of a sudden, bloop, for no reason, and you're like, what the hell? All that, it's all doing its thing, like it's ranging back and forth, it's tick up, it's ticks down, there's nothing crazy in the volume, and then it just ticks down on only 26 slots for no reason other than to fuck me over, right? Well, the spread still sucks, right? But there is that stack at 24. I don't care what price it's, well, I do care what price it's at, but I don't care if it's 11 or $15. I just want somebody to hit me with the limit order. Hey, the spread is coming in here now. Spread is coming in here now. Come on, pick me off. Nope. They're going to make me scratch this, aren't they? All right. Fine. There was one point at which I think I could have market order hit into that, and I didn't. So a little bit of a misread from me, maybe, but it's just kind of been a mess here, anyways. So to have gotten as much as I did is, it's okay. It's okay. I did get more favorable than unfavorable tick in all of that. But I think the big problem there was that I could have gotten so much better of a price than I did where I got in, right? Because I got in at 0.93. Well, that's a little curious that the treasuries are bouncing all the way back up to there and the yields are not coming back a little bit more, but and a part of me is still kind of like, you can just hold it. But this action is just really frustrating. I don't think that it is worth the emotional turmoil yet, Not sure that the opportunity is really there to justify me being as stubborn. And I mean, I was kind of, I wanted out when we were up there, so. S&P 500 still looking sad. Okay. Microsoft shares slide on guidance cut due to unfavorable Forex movements. Having recent frozen new hiring is Microsoft a canary. Okay, so that's a really key note there that I think matters explains why the S&P 500 took the dive there. And that weakness in the S&P 500 could lead to a flight to safety bid. I'm kind of thinking that if it wasn't for the S&P 500 just completely dropping out here, that the treasuries might have, we might have gotten the trade that we wanted in the treasury, right? Celsius has a new feature. They hold your token for 3 weeks and then just alter the date. Celsius also blocks you on Twitter for calling them out. Dude, that whole thing is just like bonkers to me. That here you've got an obvious Ponzi scheme, and then they turn off the sell button. They're just like, nah, you know what? Nobody can get out of the Ponzi now. You all have to hold it. And people are not like up in arms about this. Like everybody's just kind of like, oh, it is what it is. We don't really care. It's just Celsius. Like, how is there not like the SEC coming out here and being like, okay, like you got to do something? Like, man, the regulators are just so flat-footed and slow on this stuff. See, like maybe now 2.94, they give it to me. Yeah. See, part of the problem that we got going here is that the spread is like almost 5 ticks in the 10-year, and it's been like that like this whole time. Like people haven't been willing to bring the spread in. There were some points where it kind of brought in, but like you're just not seeing market orders hit into it because the spread is too much, so nobody's willing to pay up for that. And especially when it's in a range, you know? Like the robot could probably have afforded to be buying all the way down through here and selling all the way down through here, and they probably would have made some money. So it's a little silly. There's 2.93. So the action is still kind of like maybe I could have gotten a better price, but it's not. We're not really getting the flow that we want. We're not really getting the flow that we wanted. So maybe no trade. You mentioned Bookmap before? Nah. I'm very familiar with what it is and everything, and I think it's a good app, but I don't really think that it provides a significant benefit over what you have in Jigsaw. And you know what? If I had been in Bookmap, I would probably be saying the same thing. Like I think that the reason you want to go to Jigsaw is because you've got a much more innovative developer that's been around longer and really understands traders. But, beyond that, it's just kind of like flavors, right? And we'll probably see this more and more because what has happened in the 5 years or so that we've been doing this is that basically everybody in the futures space has come around to the usefulness of, at the very least, using volume profile. So pretty much everybody has order flow tools of some sort. So, where's the innovation going to be at beyond that? Well, I think that the place that the most fertile ground that I see for innovation is in integrating machine learning, right? I'm hoping, I don't know what it is that they're going to do. They're supposedly going to do something, but I'm hoping that Jigsaw makes it so that I can like export the data to an Excel spreadsheet or a Python data frame and implement machine learning stuff. That'd be so cool. I could implement machine learning and automated trading and have something auto bid, auto pull for me. That'd be great. Okay, so that was the move that I was worried about and scared me out. So, in Bloomberg tweets in India, 90% of women aren't in the workforce. It's an economic disaster. So you need women to work for it to be good for your economy. Oh, but they disappear. A small fraction of women in India had formal employment before the pandemic. COVID made it so much worse. Yeah. Yeah. I don't know, guys, about that one. Do you think that some countries are pushing economic develop well, what do we say? Economic um productivity over our familial, physical, and mental well-being? Kind of seems to me like if you need a substantial portion of women to be working for your economy to be working well, that there's like a fundamental problem there, because if they don't want to work, then that should be fine. India weighs this potential. I don't know. I think that the people of India are from everything that, granted, so here's the problem, is that all of the people that I've met from India are probably more the upper echelon of Indian society. I mean, I did meet people that were from all different provinces and stuff. It was really curious, and they would know. Oh man, Indian people, they you know they'll hear a person's name and they're immediately, oh, they're from this province. That's curious because that's a poor province. And for them to be able to get into a big financial company like this is really unusual, sort of a thing, right? Like they immediately know that's Indian people. So I met people from all walks of life, and they were all very much freedom loving people, and like they would do their festival and like Indian Independence Day and all that sort of stuff. And I was always very, it gave me a very, very favorable um opinion of India, and it's always made it a spot that like I just kind of keep an eye on there, and I'm like, someday they're going to start growing and it's going to be really great. They just, right now, you have this problem over there in India where you need the right person, right? Which is not what you want. You want a system that can be effective regardless of who's in power. I think that you have a lot of that in the United States. That if you have a bad president, like we can survive. It's okay. It's not like a complete disaster. But in India, that's not the case. And in India, it just seems like they've had a really hard time getting a really good leader in there that can really push the country, over the hump, And more recently, it's been really bad, right? Like I don't know what's going through the head of the current government in India, siding with China over the United States, or siding with Russia over the United States on like this Russia's thing and that sort of stuff. It's like, dude, China and Russia aren't going to have your back, right? Those guys are your enemies, your regional adversaries. Why wouldn't you want to be like, we want to be as close with the US and the West as possible? I don't, makes no sense to me. Well, we got about 5 minutes until the S&P 500 open, and the treasuries have decided that they're just not going anywhere today. I'm a little surprised. I really thought that after what happened yesterday, that there would be some knockoff effects and everything, but this action is just ugh. Ugh, ugh, ugh. I love it when people come in and try to post links and the robot deletes them. And then they try like a bunch of different times and the robot still deletes them, so they give up. Oh, that's the best. That's the best change I ever made in Discord, was adding the link filtering to the robot, so that if you're not a member, it will just delete them. What? Trading Floor Audio says Biden approval is now below every modern president of the last 80 years. Election Central, the lackluster leader's approval rating has fallen below every president of the modern era at this stage of their term. Well, at this stage of their term, okay. Okay, sure. Looks like this is where the treasuries maybe say, okay, let's go back to the other side of the range again. Do you think so? I don't know. I think that you have to do one of them funky, like, oh, look, we broke to the upside. You're all gonna, everybody FOMOs into it, and then maybe it turns down. Man, what a day. I was hoping that we would get a really interesting day where we could catch another good winner. Like if it, I was honestly, I was thinking, hey, we could make a $50 winner, because otherwise I wouldn't have been willing to hold that first trade as much as I did, because I had like 10 ticks against me, right? But I said, well, the potential for them to move down here is high enough that I think I can give up a little bit of the spread. But I think that in that particular instance, it wasn't, right? Because if I had gotten filled on limit on the bottom side, I probably could have made $20, $25 off of all of that, and then market ordered out and would have guaranteed my profit. And I could have made like $15 or something like that. There were some opportunities. Maybe if I had managed the orders a little bit different, it could have gotten out. But I was being a little bit loose with it, because I thought that there was the opportunity that if they started to break out of that range to the downside, that it could really run. But I was wrong. And at least I realized that at that point that I was wrong, and was still able to scratch the trade. But man, it's just frustrating, because tomorrow I don't know what we're gonna get. We're having the baby tomorrow, but I won't know until tonight what time we're supposed to go in. So I don't know if we'll have a full stream or what the deal is. I'll still be around, of course, because I'll just be, I'll still have in fact, I might be more active tomorrow in the end, and certainly next week, but consumers are prioritizing travel-based spending despite inflation, says Yahoo Finance. Yeah, that's a little bit more like what I was thinking here in the treasuries, is like, if this is still range bound, it would be just a little silly for them to come up to the top of the range and then turn around again. Like, they're gonna have to make an attempt to extend the range. And the 6J's still sitting in the middle too. There is a hint of selling in Bitcoin. I'm a little concerned. Earlier in the week, it looked like, hey, somebody's building this up and looks like they're going to take it. And then yesterday, it gave it all up. And if we see continued selling into the weekend in Bitcoin, that could be really negative, right? If we had another down week, because that's kind of how it happened before, was they kind of started to sell into the weekend. That seems to be the pattern in Bitcoin, is like it very much matters what it's doing going into the weekend. Now my new squawk is talking about Microsoft. Okay, there it goes. S&P 500 selling hard on the open, and the Treasury's moving up with a flight to safety bid. Likely because of this guidance change from Microsoft. Microsoft being possibly the strongest tech company off of the last slate of earnings. So last options cycle, 40-50 was a key line in the sand of sorts, that once they dipped below 40-50, it was like whoosh, right? Or like sheesh. So this move off of the open, it's possible they could get to 40-50. Although if they got to 40-50 and then they were going to have like the extension below, that would be like a really crazy high volatility day. So EU approves partial Russian oil ban and sanctions on Sberbank. Sberbank, SBER Bank. Is that an abbreviation, or is that the name of it? SBER, that's not a word. Sberbank. SB, that's not a consonant in the English language. Gold doing okay here. Gold up to 1867 now, up from 1850 or so when we started. Isn't that, and hey, good Jar Jar, how's that? Isn't that a nice little change for once? Is gold is moving up and Bitcoin is moving down? Because the gold trade has been frustrating lately. I tell you what, there's a point. I don't know where it comes from. Yeah, gold has been following Xian. I mean, that's been the frustrating thing, is like, it's supposed to be an inflation hedge. They raise rates and gold sells, right? and like the really insane thing about it is that like interest rates did not follow the rise in inflation like nearly as much, right? We're still only like 3% interest rates and inflation is like 10%, right? And gold still didn't take off. So what does that tell you? Well, orders move markets, and gold probably moves primarily because of retail people trying to, hedge against inflation or whatever the deal is. And since everybody got enamored with Bitcoin in this latest market mania, gold didn't take off like maybe it normally would have. Because I remember in post 2008, gold was hot, right? I think that a lot of that speculation was driven more by retail people. Literally means savings bank. Oh, that's interesting. SB, savings bank, bank. Wait, so the name literally, so is the name savings bank? Oh, geez. I know that nobody outside Utah will care about this headline, but Salt Lake Police Department investigating a purse snatching, pistol whipping incident at Gateway Mall. What? That's a little funny to me that there's people stealing purses and pistol whipping women in the Gateway Mall is kind of bizarre. Yeah, look, they're coming back up here. So I think that with the treasuries, I'm not seeing the meta orders sell that I wanted to see. And at this point, I don't have any reason to believe that it will come through. We're still kind of coming through in the range. And right now, the most dominant factor in the treasuries seems to be the flight to safety bid. The flight to safety bid that they're getting is still really tiny. So that doesn't really excite me to get in a long in the treasuries either. So, and I could come in and start playing with the E-mini, but I'm having a hard time deciding that that's going to extend lower or not. They've already come quite a ways, right? Well, look at that. They just as soon as I say that, they're like, "Oh no, Seth, we're gonna be doing this all day. Like we really do want to sell this." They run into a little bit of liquidity there, but man, there was a sell there, man. Whew. The Democrats' lead impeachment lawyer to run for Congress. I was not too impressed with his performance, though. I don't know. That one's weird. That's a weird headline. That is not a headline that I expected to read today. It kind of sucks because I like politics, but like the reality is politics are kind of boring right now. You would think that with Biden doing so badly that politics would be like really hot and interesting, but they're not. Like the cultural issues are more interesting right now, aren't they? More recently, the argument over gun rights, the Amber Heard trial, Johnny Depp Amber Heard trial, the trans movement. These are all the things. That's the stuff that we've been focused on and not the politics. It's almost like the news is intentionally trying to look away. Because when like, think about it. Like, it doesn't matter what it was Donald Trump was doing. They were talking about it, right? And when Donald Trump was doing poorly, he's not doing as poorly as Joe Biden is now in the polls, but he was close, right? And they were hammering him on it, and like everybody was talking about it. And now it's like they're intentionally avoiding the issue. Like they don't want to talk about the politics because they know how bad it is for Democrats. You get what you smell what I'm stepping in here, Kind of curious. Although I don't know, like some of these cultural issues are kind of not in Europe. What do you mean by that, Tobias? That not in Europe. Anyways, so some of these things like the Amber Heard Johnny Depp trial, I think that was a step in the right direction. I this whole thing where when it was like if somebody accuses somebody of doing something, a famous person of doing something, and it comes out in the media and public opinion immediately goes against them, and it's like, there's no recourse. There's a reason you should be innocent until proven guilty. And I think that should apply in the public sphere as well, because people say, well, that's only for the government. We can totally call you guilty if we feel like it. But I really think that we should wait for the information and give people a chance to defend themselves, because it's just not what happened to Johnny Depp was just not okay. Politics are not boring in the EU. How so? Because I can't really think of a headline in the EU that's like really super interesting and garnering a lot of attention there. Well, I guess you could mean Russia. That's a little bit different. That's not politics. That's geopolitics, right? Geopolitics are, geopolitics for a really, really long time was just kind of like snore, and now geopolitics is like, yeah, crazy, crazy interesting. Russia controls 20% of Ukraine, Zelensky says, as UN civilian death toll surpasses 4,000. You're happy, Dep 1-ish? Well, it is something that I didn't quite pick up on, and that I'm not seeing too much in the conversation, is that Amber Heard also won her countersuit for $2 million or whatever. Like, Dep won $10 million, and she won $2 million. But it kind of sounds to me like what happened was Amber Heard was extremely abusive, and Johnny Depp ended up being abusive back and trying to, defend himself or whatever. So I don't think that you can say that like her complaints were illegitimate, but it certainly seems like the case that Amber Heard was more in the wrong than Johnny Depp was. But one for the guys, yeah, I do think that that's significant. Like, I've seen, man, like when it comes to legal issues between men and women, nobody wins, man. Nobody wins. But the men probably lose more than the women, and so having a situation where you get to see the injustice done against a man, and the guy you get his justice, that is a significant cultural change, and I do think that it is probably a good thing for society. I have to see how people react to it, but because there was some, like here's the thing, like it's a legal battle, right? So who wins and loses, it shouldn't have cultural impacts on us per se, right? It should just be, what are the facts of the case? And yet you go out and there was like some of these feminist websites and stuff that were saying Johnny Depp needed to lose and all of these sorts of things. And so that's why I say that it is a good thing that Johnny Depp won, because I think that push in politics that was coming from that direction, where it was like women should always be believed and considered right all the time. That was a bad thing. That was a bad thing for society. Within the EU, there's a lot of discussion because of that weapon deliveries and how to handle the energy dependence. Yeah, well, the energy dependence thing is so man. I was I love how you guys are so good at being able to say the thing that will like just have me go in a completely different direction about the conversation. I don't know. The cultural issues aren't as interesting to me, because the cultural issues that I want to talk about are things that it seems like are dangerous to talk about on YouTube, right? Because in my family, my wife was married to a gay man. She knew that he was gay when they got married, and they tried to make it work out, and it seemed like it was working out, but in the end he was sleeping around with men behind her back the whole time. And so now we've got this dynamic going with the stepkids when they're at dad's house versus our house, right? And so and the eldest is hanging out with the LGBT people a lot, and he's bringing up some of these discussion points. So now I'm doing yesterday I went deep into the hole, man. Oh, look at that. This is come back to the other side of the range very quickly. You think that this time maybe they'll bust out the bottom? Could do. Anyways, so I've been doing some research and stuff. It's really striking to me that you try and search for stuff finding like the pro LGBT side is like very, very easy, and finding the counter arguments to that is extremely hard. But I just reading on myself and my understanding of data science and stuff gives, I can see poke some holes in it, and I'm kind of like, well, I need an expert. I need a bigger expert to kind of look at some of this for me, right? Anyways, those are kind of, but going too deep into the specifics of that issue here on YouTube is probably not so wise, right? So other issue that really interests me though, energy independence, man. The whole situation in Europe with energy is just, can't believe that it's gotten so bad. And we warned them about, getting too much of their energy from Russia, and the EU just kept going for it, and it really bit them in the butt, right? But I was watching the 3 Mile Island documentary on Netflix yesterday, because grandma and grandpa have come from Oklahoma because we're going to be having a baby, right? So they're staying with us, and he was a nuclear safety engineer at a nuclear power plant for like 30 years, right? So he knows all about this stuff. So we're watching that documentary, man. And sometimes when I'm just thinking about it, it almost makes my blood boil. That one incident that actually ended up, there was no threat to the public whatsoever, basically. I mean, they had like a full nuclear meltdown, it turns out. But the public was never in any danger because the plant was built correctly. And yet, because of that 3 Mile Island incident, they've basically halted any kind of nuclear power development for the last 50 years now. Can you imagine where we could possibly be at today if we had continued investing heavily into the development of nuclear power for the last 50 years, right? Can you imagine how much cheaper nuclear power would be and how much more efficient? And maybe we would have mini nuclear reactors already. Like, there's all of these little innovations that next gen nuclear power companies are trying to bring about, like molten salt reactors, thorium reactors, mini reactors, all of these sorts of things, reactors that are just a lot cheaper but safer. And 50 years of development passed, right? We could all have energy dependence, but because of that one incident and the way that the politicians bungled it, we're in the situation that we are today. It makes my blood boil. We need nuclear sanctuary states, right? Well, like the thing that really makes me mad is that China is investing heavily into nuclear power stuff, right? So what's going to happen is the Chinese are going to be the ones that are going to have the nuclear energy independence, and the United States will still be trying to catch up. Man, as bridge technology, nuclear power would be completely fine for, but I am from East Germany, and you can't believe how many people had good opinions about Russia. Luckily that changed. Jeez. Yeah. Hey, look, there's 23.5 finally. See, if I had held my trade, now I would be at $20 and I would be like, okay, let's just, and look, the spread has come in now too. So I could just be, all right, let's just market sell into this and take $29 or $19. But I would have had to have taken on another 15, 20 ticks of adverse excursion. So China has thorium already, but I don't know. No, I have to, one of those things that frustrates me is that with some of these niche issues, you'll read a headline and you'll remember the headline, but then it will be really hard to find it, a year later. The internet changes a lot in a year, and so sometimes those stories are just really hard to find. Like, the search engines don't index them very well. But I very specifically remember reading a thing saying that China was trying to develop thorium, but they didn't have it. So like here's the thing, Tobias. Like we already have thorium, kind of. Like we created a reactor that ran on thorium back in the 50s or 60s. So the problem is not like how do you get thorium to work. The problem is more to do with costs. There's my fill. That makes me happy, dude. And I get my average position to be all the way the other side of the range. I'm liking it. You know what? I'm a little disappointed with how this turned out for my live account, but it's fine. It's fine. Thing is I don't know if this downtrend is going to continue or not. I'm kind of leaning towards that they're going to extend this range and then they're going to flip back up again, frustrating everybody. Anyways, the big barrier with thorium is costs, because the way that thorium works is you basically dissolve thorium in a liquid. So it is a molten salt. It's like a liquid salt chemical mixture that gets super, super hot. And that super, super hot mixture is then what turns the turbine, right? And so something like that is very corrosive, right? A salt is going to be very corrosive. And so all of the research is about, okay, what materials do you build this reactor out of so that it lasts a really long time and you actually get your money out of it, right? So that's the holdup with the molten salt reactor. They started a live test on an experimental thorium reactor in September, October of last year. Oh, no, yeah, I think you're right. Well, there was, wasn't there like an experimental reactor in Idaho? I don't remember if that was a thorium one or if that was the mini nuke reactor. Dude, the mini nukes thing that Bill Gates is kind of like heading up, that is so, I don't want to, exciting to me. Like I'm like I want to put money into that. You know, if there was a stock of that, I would be dumping as much as I could into it. Not that I would be like, oh, this is a great investment, just like to make sure it happens, you know? All right, there's some extension now. Now I'm up $30. Damn it. That sucks, right? Think it could go more? Because we could go from 2.96 to 3% here. So the thing is, the volume in the 10-year was still not what I wanted. About 4,000, 5,000 net order change. So the way that I want to trade, that move down wasn't my trade, but I was in it in the right direction. Right? The timing was wrong. Well, once you get into that, then it was like not a good trade, right? But I did have the direction of the day correct, and if I had held on to that long enough, I would have made $30. But the adverse excursion, I don't think it was worth it. I don't think it was worth it. I made $2 instead. Darn. What does that put my account at, by the way? Oh, this is over here. 180. Yeah, okay. Right where we were. I was hoping that maybe we could get it above 200 this week, but it just hasn't worked out that way. Yeah. Okay. So you see those ticks up there at 23. Like it's still very slippery. How would you have improved the entry timing in ZN? I don't think in that case that there really was, because hold on, New Squawk is talking. So what I think we have here, what I think we had here was a range with markets kind of pushing both sides of that range, and mostly the treasuries mostly being pushed around by forex, right? And until the S&P 500 opened, and then finally the treasuries moved. So I think that if we were to have made a better time to trade, we could have said, I still think that they are going to sell the treasuries today. They are at the high end of the range, so that's good. And the S&P 500 is about to open, and it looks like the market is very much waiting for the S&P 500 to get going before they make too many decisions here, right? And so that's probably what the right trade would have been. But the thing was, what would we have had at that point that would have told us that there really was going to be a strong sell meta order to come in? And that's where I'm saying I don't think that this actually was a trade. Like, this is a case where I had a trade in a theory, and that theory ended up being wrong, and then the treasuries went my direction anyways, even though I was wrong, right? That's what I think happened there. So trying to have held the trade or taken the trade at a different time would not have been appropriate for my strategy, or with what I knew. But now that it's going, now the other question is, when we got to those lows, should we have tried to jump on the bandwagon at 2.95? And what I'm seeing right now is kind of suggesting to me, yeah, maybe you should have. Now, one caveat I would put here, though, is that the overnight low is 118.18.5, and yesterday's low was 118.16.5. And with the exception of a little bit of volume on the new break of regular session lows, the treasuries are still quite slippery, and the S&P 500 is still very much turning down. So I would not discount the possibility of another flight to safety bid coming up and the treasuries retracing back to, say, 118.25, right? Or 26 maybe. It's possible, although that is enough of a trend that probably people aren't going to fight it, so you might not get as much of a pullback as you want. But so from my perspective, buy at 2.965, nah. Like, if I was still in the trade, I would be thinking I might be able to let this go a little bit further, but I'm probably searching for the node, probably searching for where too much volume gets traded in a spot and they have to back up. So it's a really interesting trade, though, don't you think? Like, normally, Seth of 2 or 3 years ago would have been way more frustrated and taken a ton of losses on that one. But and maybe I got lucky, because this time I was like, maybe I take it off at -10, but I think it's going to revert, and I'm willing to even maybe take a $20 loss today here off of this, right? And especially if it's starting to range, if it really is in that range thing, then I'll probably have a pretty good chance of it coming back to me, right? Whereas on other days I would have been trying to take it every run and being disappointed, right? I would add waiting a couple of ticks for price to break down through volume point of control. All right. Well, you mean like yesterday's volume point of control from 21.5? I don't know. One of the things that I always come back to in my own mind while I'm talking to you guys that I don't always say is like I can't help but notice and point out these levels that match up with things that I see, right? Like there's very much we're right where yesterday's volume point of control was, and there appears to be a slight little bit of a bounce. So anybody that's trading that kind of volume profile sort of a trade, that's like the sort of thing that they would do is they would be like, okay, I'm going to take it short and then I'm going to take it off at the volume point of control. And or maybe when we get to the volume point of control, I'm looking for a little bit of a bounce there or something, but I know really deep down, I know that it doesn't really matter. Like it may be a point at which, if there's nothing else going on, maybe some people take some trades there and it causes a bounce. But if there's a large sell meta order, it doesn't matter. They're going to keep selling until they've completed the order. I'm not sure if there's really truly a strong sell meta order here, though, right? So maybe that's why we're getting a little bit of a bounce here, right? So like I'll point the levels out, but I just know, especially if it was a level from yesterday, that it doesn't necessarily matter, right? The thing that matters is what does the liquidity look like? How big is the meta order? And they're going to trade the meta order in line with, they're going to do this. That's the way that those guys execute those things, right? Or they're going to wait. They're going to let somebody else do it up to there. And then just before the impact is done, they're going to take it the other way, right? So how far that goes is mostly dependent on the liquidity and how slippery it is. Today, it's really, really slippery, right? Okay. And how slippery it is and how liquid the market is from day to day tends to be pretty consistent, right? And so that's why, if we're trading, we had to move down and then we did this, right? Okay. So this is the node essentially at that point, right? And then there was no other meta order, though. They were done. They were done for the day. Okay. So then, of course, yeah, if there's nothing else is going on, they should be able to go around this a little bit and they'll probably be around that same node. It's not because that node is special. Like everybody thinks that that node is special. It means something and people will trade off of it because it is a special level. No, it's not. It's just that's what the liquidity of the market, and it's in the same spot. And so it's going to end up rotating around the same space. But as soon as another meta order comes in the other direction, doesn't matter anymore. It doesn't matter. Yeah, slippery new trading jargon. Is there really a better way to describe it? When the treasuries start ticking around on almost no volume, right? There was a bunch of spots back here. Like, remember that one where I pointed it out earlier before it kind of turned back up at 26? And I said, yeah, there's going to be that guy that's long 26 half, and he wants it to go up, and it's kind of bouncing, and then all of a sudden down tick at 21. And then what happened? They down ticked even further, and all those guys stopped out, and then they went to the high end of the range, right? Very slippery. And when they went up to the high end of the range, didn't take very much volume to take them to the high end of the range, and didn't take them very much volume to bring them down to here. It's a good term. Yeah, it is. I think so. It's a slippery market. Now that's a little bit of an aggressive downtick in the 5-year there. Kind of hinting they want to go further. Maybe not quite. Yeah. So anyways, I'm always kind of fighting this battle in my head between like, you know, what I'm noticing and what I actually know to be to actually describe what markets are going to do, right? Because the reality is that most of what I notice probably doesn't have that much value. Although the one thing that I do think that I got that I think we kind of undervalue is just the tendency to note, okay, it ticked up. Okay. Or let's say that we just ticked down. Let's say that, okay, so we ticked down. That was an okay tick. It wasn't like the offer was really strong like immediately, but it did go through and it continued through, right? So that's okay. So now it could just as easily now pull at 21 and tick up, and then you'd say, "Oh, well that meant nothing then," right? Well, it's not that it meant nothing. It's just it's like a tea leaf, right? It's just kind of a little measure each tick about how forceful the market orders are and how quick the limit orders are to react to it, right? That can kind of give you a little bit of a hint about how much trend there actually is in this, right? Okay, so they ticked back up. This bid isn't incredibly aggressive, but so that kind of says to me that the pressure is still down, but the momentum is not incredibly forceful, right? So I try and focus on that stuff a little bit more. Let's see here. The White House launches a website to track and show the American people the actions we are taking to get more infant formula to the shelves. And News Squawk tweets, "Ha, that's cute. Now do one with oil and overlay it with a crude chart." Oh, wait, because does the website have like a chart? Here's what we're doing to addressing the infant formula shortage. Over the past several months, the Biden-Harris administration has mobilized to get infant formula back on shelves and address the underlying issues that have contributed to the infant formula shortage. President Biden knows that parents across the country are worried about finding infant formula to feed their babies. I'm concerned about it. I'm about to have a baby. Makes me a little mad, to be honest. What time does the profile start? Good question. I don't remember. Wait, I can pull it up here. It's the CBOT session, so it resets. It resets at the start of the pit session. It doesn't include the overnight. This thing over here, though. This includes the overnight. Right. A little surprised here. There was a decent amount of volume traded up there at the top, wasn't there? But it kind of puts it in perspective, doesn't it? Right? Like what we just saw there in the treasuries when I'm watching it on the DOM is like, that was a pretty good move there. I kind of regret not being on it. This could continue further. But then when you look at the higher picture, you're kind of like, oh, actually, here's the range. There's been brief breakouts of the range that have failed down to here. Yeah, maybe it could be a false breakout and move down, but we don't really have any reason to believe that it's going to do anything other than continue to chop back and forth. Right? Of course, there's going to be some price action trader out there that says, well, when it's bounced off of it X times in this situation, then you take it. Then, well, okay, prove it. But I digress. Which is why he has directed his administration to do everything possible to ensure that there's enough safe infant formula in the country available for families that need it. And then there's progress by the numbers. Infant formula sales in the U.S. And it's gone up. Cool. Well, I mean, I'm actually impressed. It's a nice website showing what he's doing and stuff. But yeah, do one with oil. That would be cool. maybe the Republican Party could go and make a website that looks exactly like that, but it's about oil. Maybe I should make that website. Dude, if I didn't have important stuff to do at work today, I think I would make that one. Let's see here. Important billing update, economic adjustment change from Verizon. Yeah. Jack ProCVX says this is what they're calling Biden inflation now. So what do you think? Do you think that they're going to go lower? So if we do go lower in the Treasury, how much further do you think it will go? I do kind of see that 16 down below us looks kind of tempting. But I'm still kind of sitting here like, what reason do you have to think that we're going to have that strong of a sell meta order? And I don't think I really actually have one. Seth, that might be a good idea. Yeah, the thing is if I made a website like that, I don't think that I would have the marketing power to get a bunch of people to visit it, you know? That's why I'm like, hey, if there's any Republican operatives out there, there's your idea. Actually, we should do this. We should do this. How do I want to say this? Yeah, this is getting a pretty good bounce here now. Really, this guy I saw would throw new websites out every week. And then he did one on cats and he made a fortune off of it. That must have been like more than 10 years ago though, huh? One of the things that I find really frustrating about the internet is that there will be some things that I'll put a ton of effort into and they just kind of fizzle out. And then there will be other things that I don't pay attention to, or I just don't have it in me anymore and I miss the opportunity, you know? So I put a lot of effort when I was a kid into blogs because that's what I saw. I was like, oh, it's all about blogs. You need to learn how to make a blog and sell stuff off of your blog. Right. So I learned all of the stuff about how to make a blog. And it was like mostly a technical thing for me. It was like, how do you make a really good WordPress website? Right. I put so much effort into that. Right. Nobody uses blogs anymore. The internet has changed so much. Fed's Brainerd is speaking right now. That might be what's moving the market here. So we could see a big move in one direction or the other. Anyways, I digress. So I put all of this effort into blogs and then the internet changed, right? Facebook took over and now like nobody really does blogs. Everything kind of happens on a couple of main social media websites, right? And blogs isn't really a thing. Now, I think that the thing that was cool was that I was able to take what I had learned about blogging and turn it around into YouTube and learn all the stuff about YouTube. And then finally with YouTube was one where I felt like I finally had a lasting success, right? Or at least we're 5 years and still going strong. And I think that the summer could be really good for us. I have a lot of good content here to come for the summer. I'm hoping that with this week that I will have taking off work, that I will be able to find moments to get away from the infants and record some videos. So that should be good. But then on the other side, I spent so much effort on the whole DJ producer sort of a thing. And I'm still kind of don't like the way that things are because I think that DJing is so much more fun. And I know that sounds stupid because so many people will say, yeah, DJs, they don't really do anything. They just get up there and push the play button and dance around and be an idiot. But to me, DJing is so much more. DJing is listening to a ton of songs and finding the best songs, and not just finding the best songs, but finding a way to put them together in a cohesive manner to, kind of keep people listening and get them to feel a variety of emotions and have fun. And that is way more interesting to me than producing. I love producing too, by the way, and I still make a lot of songs. But I kind of miss DJing. Like, I can DJ on my own and that's fun, but it's not as fun as trying to play to an audience, right? And the way that the internet is set up right now with content ID problems and all that, DJing can't really be a thing. So I think that was maybe the thing that kind of crushed my soul and like made me not go as much into it. But now these days you can put your songs on Spotify and you'll get plays on Spotify, and that solves a lot of the problems that you maybe had with like SoundCloud and things like that. And so I don't know. I guess it's never too late to start. I could put more effort into producing, but that's I don't have enough time to put into my YouTube channel, let alone pick up being more serious about my producing. So Spotify is just a missed opportunity for me. Kind of sucks, right? And I just hate how often that happens on the internet. Like, it really is like sometimes you just have to catch lightning in a bottle, right? There are some really silly YouTube sites. Yeah. Well, it's a little zany how you can put together a really low effort channel and get lots of views sometimes if it's the right thing. When I got a friend signed recording label, VP told me the key is riffs that hit the masses of all ages. Yeah, but I think that it's more than that. Like, there's a real problem in the industry right now because what happens is there's so much content out there now. Labels can literally pick from anybody that they want, right? And yeah, they're gonna look for riffs that hit the masses, but they're gonna get like 1,000 of those a day. How do you pick which ones? And so the ones that they pick end up being from people that like are already developing followings, essentially, right? So then what ends up happening is if you want to be like a prominent producer, the best way to become a prominent producer is like the influencer route, right? It's like you have a YouTube channel teaching people how to produce, and then you become famous. Like that's the template that I've seen the most new successful artists take. There's a few of them that have taken it through TikTok, but that one's kind of hard because of the way that the music has been going on TikTok lately. So it's rough. And the thing is that it used to be, man, that's some downticks. Did they really didn't like what she said. Market pricing for 50 basis point increases in June and July appears to be a credible path. Man, that they really moved. They bounced hard off of that, but they really moved off of that one. If we don't see a deceleration in monthly inflation prints, then it might well be appropriate to have another 50 basis point hike. As we approach September, it becomes more difficult to say. Okay, so I see the market moving off of what Brainerd is saying, but when I read it, it sounds like the same kind of setup that we already knew. So in my mind, uh, I'm concerned about some of the macro data that we've seen, and I am concerned that we could see the 10-year move to like 3.5, 3.75. But I am not seeing anything in Brainerd's comments to change the picture. So I'm a little bit weary about trying to take a speculative trade at this juncture. Okay. Okay, wait. So Forex Live is saying Brainerd takes a September pause off the table, is their take on it. As we approach September, it becomes more difficult to say. How is that taking? Oh, no, Brainerd. It is tough to see the case for a September pause now. Okay. So she's saying that I don't see a case for a September pause, but our ability to see where things will be in September is much, we don't have a very good look into that yet, which is probably true. Okay, so that one is a change worthy of treasuries pushing, although they're bouncing back here, so I don't know if that's going to be like something that's really going to make them run. You have friends making a fortune just selling beats to rappers. I could probably do that if I knew any rappers to sell to. like here's the other thing is I bet you I could come in and work full time and make money through various means from producing. But I don't think that I would make as much as I do programming. And you know what? I enjoy programming too. I just enjoy too many different things, guys. And you know what? Programming and the market and YouTube, that's and weightlifting, it's pretty much all my time. And so as of late, music is kind of taking a backseat. And you know what? I'm sure that that's how it works for most men my age. It's kind of sad, but it is what it is. It is what it is. And they're coming all the way back up to 24 now. I don't know, guys. This is all a little indecisive, I feel. I don't know. I think that what Brainerd said there is significant, but there's nuance to it as well. And I think that we've had such a slippery market today already, and I think that's kind of what's going on here. So we're kind of in a situation where if I catch a trend, well, maybe so one possibility that I see here is that let's see here. So first of all, I'm going to put that right there. I probably should have already done that. That's okay. I will add in here because I think that there is still a possibility that later on the trend turns, negative and it just keeps going. But Brainerd is still speaking, and now that she's already roiled the markets are likely to be really choppy until she's done speaking. So it's probably not a good idea for me to try and use my live account at the moment. If I'm looking to only make or lose $10, that volatility is going to be too much for that account. But on this simulated swing trade, I think I can add here a little bit on the possibility that we'll go will go down big time. When you were young, you were networked huge in the music industry. Well, there you go. That's what I don't know. Like I knew a lot of people in the local scene, but I just never kind of got to the point where like I could see the thing. So like here's the thing. In this industry, I know what's going on, man. I feel like I'm at the forefront of the retail futures trading industry. I understand what the trends are. I can see where the opportunities in the future may lie. I speak to the top influencers in the space. I mean, they're very accessible, so that kind of helps. I've spoken to so many brokers and stuff. I've been doing, man, this week. This week I've been reaching out to a ton of different people trying to get my hands on broker tech data. And I'm pretty sure that my best choice is probably trading technologies, because everyone else that I've asked about this, it's or that I've looked into, it's either institutional clients or they don't have it anymore. So but you know, I'll reach out to a bunch of people because of that. You know, you get, you know, and so if I was looking, if I had something like maybe I had written my own platform, right? I don't have the time to write my own platform, but it's definitely something that interests me. If I wrote my own platform, I know exactly who I'd want to start talking to. I know exactly where I need to go and who to start talking to, and how to build those relationships and stuff. And I could never do that in the music industry. But you know, maybe it was because I was just only talking to my local people here in the scene and stuff, and that changes so quickly. But yeah, it was frustrating. Quite a battle between different asset classes today. Well, the S&P 500 is sure being like, they were starting to pull things out and recover their losses before Brainerd opened her mouth, weren't they? It is hard to see a case for a pause in rate hikes policy is not on a preset course. That to me, like yesterday, I tweeted out, I'm starting to think that maybe we need to go to 3.5, 3 3.75. And Brainerd's comments there, I think, are supportive of that view. So, okay, her interview on CNBC has ended, so that helps. So it's hard for me to see the opportunity at the moment, because I'm kind of looking for something where I could get in on the treasury and maybe be able to just hold it. But I don't know if I'm going to get that opportunity. That reminds me a lot of where we were at like last December and even periods of January, right? Where it's like, all of a sudden I feel very confident that the midterm direction is going to be lower in treasuries, and I just have a really hard time finding a suitable entry that allows me to hold it given my overly tight risk parameters. Oh, we're gonna have gas inventories here in a sec, right? Get the conversion factor on ZT above 1 at least. I'm not quite sure what you're meaning, but here's the thing is like, if I find somebody that has broker tech data, like you know what it's going to be, right? It's going to be like, you're going to have to pay $50 for the platform, and you have to pay $100 for the data, and there's no way that you're going to be able to place enough trades in the 5-year to make money market making to do that. And that's why nobody else has done it. What I really need to do is get the CME to talk to me. I did like fill out some of their forms and stuff, but I didn't actually ever get anybody to message me. So CME, you want to, if you want to bring the spread on the 5-year in, because like really when the spread is like 20 ticks, that's a little silly. Okay. I would like to help you do that. talk to me. Talk to me. I'm sure we could figure something out. I'm willing to put a few thousand into it, but I'm probably going to need help from the CME to do it. Rate hike pause on September. I don't think it was ever seriously on the table. Yeah, well, but I mean, it was like one guy was kind of saying it, and to his credit, with the way that the stock market fell in May, the rate hike pause in September make a lot of sense because there really is a lot of stuff going on now that kind of suggests that we could go into a recession, and that if the Federal Reserve gets too aggressive for too long, that it would make such a recession really, really ugly, right? But I think that theory that they were all saying that off of took a huge hit yesterday, because all of the economic numbers that we saw there were like inflation's still going up and it's not slowing down, and the change in interest rates that we've seen isn't even remotely close to enough to solve the problem. Well, okay, so I understand the conversion factor math. I remember learning all about that last time that they did a webinar. But what are you meaning by get the conversion factor on ZT above 1 at least? Oh, okay, wait. If the coupon rate is lower on bonds, then the conversion factor would be less than 1. 1 implies a rate of 6%. So you're saying that you think that the Federal Reserve needs to keep raising until the conversion factor on the Treasury futures is back to like what it should be. I gotcha. Right, because the conversion factor shouldn't be what it is, and it kind of makes you wonder why the CME hasn't changed it from the 6% that they use. Yeah. Because to see the treasuries at like to see the 30-year at 138 is kind of like, wait, what? How is that? Okay. With like such a tiny interest rate, and you have to pay up so much for it, because isn't par supposed to be 100? I get you. Is that what you're kind of saying, Ashkay? Akshay. Yes. Oh, Anthony Crudelli is talking to Ninja Trader. It's a little early to be doing a live though for him. Hey, I got a fill there. I'll take this back to the volume node. Well, I still got 30 minutes. I mean, I could take 2.95. I don't know, guys. Yeah, but I want it on ZT, the 2-year. Yeah, I gotcha. No, I really think I could be wrong, but it seems to me that you can do all sorts of fun stuff when you start trading the spreads, right? So like I think maybe the thing that kind of got me thinking about this was actually saying that he was using butterflies with his trading in the SOFR futures. And that just kind of made me think about how I was like, yeah, part of the problem with market trying to be a quote unquote market maker here in the micro treasuries is the risk of adverse excursion. That it's hard for me to just come in and say, okay, I'll put bids down here and I'll take offers down here, and I'm just going to take all of those fills. And, if a trend arrives, you're going to get screwed, right? But if you have spreads, Now you can say, I'm only going to take fills on this side and on this side and on this side. And generally speaking, the spread shouldn't move too much. And so when it does move, when the spread does move, the amount that I'm going to make from market making at every price should cancel out what I'm losing from the spread moving on me, from the spread steepening or flattening, right? That's where I'm kind of thinking about it. But then it was like, yeah, but that's not going to work when the spread in the 5-year is 10 ticks. That's not going to work. So the first thing that we got to do is we got to get the spread to come in on the 5-year. See, I think 2-year and 5-year micros will never have acceptable volume because SO, FR, and ED already have a deep and active market out 10 years. Lit volumes till 3 years and OTC. Well, sure. Well, but I mean, those are professional instruments, right? That they're kind of forced to trade, right? It is just retail traders here in the micros and a few robots. Like I think that there's literally like 3 robots trading these things or something, right? So in the 10-year, they've brought it in, and you can see that like as the retail traders start to get active, then the spread comes in and you can actually do stuff, right? So the reason that I think it's been that way is because we as retail traders have always been just more comfortable trading the 10-year outright. So in order to get the 5-year micros to have more volume in them, essentially what needs to happen is we need the retail traders to be more comfortable with trading the spreads, right? Which is kind of the whole point of the designing it the way that they did, right? So I think what's going to happen is they're just going to keep them all. I mean, the 10-year I think is becoming successful. They're just going to keep them all, and eventually retail traders will catch on to it. But I want to accelerate that a little bit. I want to come in and say, I don't know if I'm going to bet that the correct interest rate right now in the 5-year is that bottom, because we're trending up, right? So he's going to force you to fill him on the side that is advantageous to him, right? So it's probably the bid is the more accurate one, and the offers are crazy. And what I want to do is I want to be in this particular situation, I want to be long 2.94 and saying, hey, look, I'll make $5 off of this. That's fine. Make $5 off of this. That'll be fine. Right. And bring that spread in. And because when I do that in the 10-year, I see the robots start to react and start to bring it in as well. And when they don't, that's when I don't get filled, right? That's how I knew that I wasn't going to get filled on that one. I think we can bring it in, but we'd need a bit of cash, and we would probably need some help from the CME to get the data that we would need to actually accurately trade that. To have tight spreads, you would need institutional volume. Yeah, I mean, okay, but think of this world, Akshay. What if in the future, trading the micro treasury yield futures was like the popular thing in the retail day trading world, right? There's all these people, they wanted to trade stocks on Robinhood and everything, and I think that they're probably coming to the conclusion that like you don't have enough money. But then we come in here and we're like, hey, you can only do this. You can do this for $50. You're only risking like $5-10 at a time, and you can do spreads too and all this sort of stuff. Like there's some opportunity for this to become popular. And the barrier has always been that futures is just really inaccessible. Like the platforms are inaccessible, and getting in is inaccessible. And like just think about what you have to do to be able to trade the way that I do. Right? You have to buy a $500 jigsaw license. You have to pay $50 a month for the live trading license. You have to pay $50 a month. Essentially, it's really more like $30 for the data, right? And then you're going to want to like get all your stuff set up and eventually having as many charts as I do and everything like that took me a long time to build up and figure out what it was that I actually needed, right? That's a lot. That's a lot for a noob, right? They're not going to do that, right? But what's happening is the futures brokers are catching on. And they're saying, oh, okay, if I really want to bring in more people as a futures, as an FCM or whatever it is, maybe they're just an introducing broker, I need to reduce the friction, right? So now you're starting to see these apps where it's like you put your email address into a field on a website and they send you an email and you log in and you're going. You're going immediately. The first screen that pops up shows you the ES and a buy and a sell button, right? And there is a DOM and there's a chart and there's everything that you would need to be basic to start out. And then from there, then you start building up to like where I'm at, right? Right? My FX book economic calendar has a different color for the American flag. What? By the way, D, did you fix your issue that you had with the synthetic dollar index chart yesterday? I'm still trying to think of a way to kind of avoid that problem. But I'm wondering if maybe it should just recommend that you always put it on the 6E or the 6J. Anyways, no, you didn't fix it yet. Okay. Because I hope that my ex. So what he did was he has his dollar index on an ES chart. And so because the ES is 09, but the FX futures go month by month. So the FX future is 06. And so if you try and pull up the FX futures with 09, you don't get anything. And that's why he wasn't getting any data. So the only solution that I have right now is that your main data series has to be the 6E. So if you still wanted it to be the ES, it would have to be, you'd put the 6E on and then the ES, and then this would be running off of the 6E. And right, you just make the 6E super tiny or something like that if that's what you wanted to do. Well, I tell you what, Brainerd really roiled this market, and I think that it was appropriate for the treasuries to sell off on her comments, but the treasuries have now whipsawed much higher after all of that. So what do you make of that? I'm not sure what to do. I was coming back here and thinking like, we could maybe we could work out 2.95. Hey, look, if you come back to 2.93, maybe I finally catch my swing and I'll actually hold it this time. What do you think? Maybe? No, probably not. Probably not. And it's interesting, actually, that you say they would need to learn about span margining first, because I feel like people will just put the trades in and the platform will tell them what their margin is available and they'll just kind of figure it out. I don't know if they actually need to know how the span margins work in that much detail, and unless you're like really start to be serious about it, right? I don't know. So here's the thing. I tried a spread trade like one time in the micro treasuries, and I was just like dead wrong. So like I think I do before I was like maybe before I was like, well, this didn't work out. This is probably a bad idea. But now I'm looking back and I'm like, no, it wasn't a bad idea. It was a bad trade. My understanding of where the spread was going to go was wrong. So I need to keep an eye out for an opportunity where we have a really good idea of which way the spread is going to go for like a month or whatever. but I don't think that I have that right now. It's kind of been going between steepening and flattening a lot lately, hasn't it? But at some point, on a day basis, so I'm usually able to sort out the direction, right? Like we were saying, it was steepening, and it's been steepening the whole session. So if I was market making with a steepener, probably would have made money. Mm-hmm. Okay, Seth, a different question. When Norton says he likes to trade against weak hands, does he mean breakout traders, retest traders, pullback traders, support? Okay, no. So the people that he's trading against are going to be the people that don't understand what the correlations are, right? So they're going to be the people that, okay, the Japanese yen is overall today moving down. Okay. So that means we want to sell the treasury. So if I'm market making, I only want to market make on the sell side, right? So I'm going to hold an offer out there. And what I'm going to do is I'm going to hold an offer out that very much does not make sense given the correlation with the 6J, right? You're forcing them to pay up, hitting into you. So maybe they're right, and maybe it's going to move and something changes, right? But based on the correlation, you're basically forcing them to pay a higher price than they probably should, right? So that's exactly what happens to me over here in the 10-year, right? We were down at 2.93, and I said, well, it's too hard for me to get filled out with a limit order right now, so I'm just going to hit into 2.93. So that means I had to pay up $5 to get it. But in my case, it did eventually move up, and so it was okay. But at that specific time, 2.93 was not a good price for you to get long. That was like $5-10 higher than probably what you could have gotten if you could possibly be filled out with a limit order, right? So those are the weak traders that Gary Norton is talking about. They're going to be people that don't understand what the current price should be based on the correlated instruments, and maybe they're hitting into you aggressively because they're just stopping out, right? So something you'll notice happen here in the micro treasuries, right, is there's always like these 200 lots, right? There's like a 200 lot at 941 and at 95, right? Is this a liquidity that's a little bit further out? So basically the robots that are holding that out there are basically saying that if somebody is out there is desperate enough to sell 2 ticks up into it, then sure, I'll take the fill. Otherwise, I'm just going to move it around, right? And that's how they make money, is that eventually somebody stops out, or we're getting some wild action and they get a move that fills into them, and then there should be a little bit of reversion and they get it off. So that's really what Norton is talking about. He's a little vague about it because, he doesn't want to give away the whole gig per se, because correlations is a very significant part of how he trades, right? But I think that the value in his system and stuff is much deeper than that. Like the value of his system is in like all of the little details. It's like pay if you ever do choose to do his course, you want to pay attention to the little details, because it's going to be tiny things that if you're a new person that you might not even realize are significant, are the things that are truly valuable about his system. Anyways, editorial: in probably downtown Chicago gets a new open outcry trading floor. What is this? Have an account, unlock this free story. No, fine. I'll just sign it. Back to story. Downtown Chicago needs help recovering from the pandemic as office closures and public safety crisis continue to weigh down on the city's business district. So it is with a mix of gratitude and mild disbelief that we welcome the launch of something most Chicagoans probably thought they'd never see again, an open outcry trading floor. On the morning of June 6th, the CBOE Global Markets is scheduled to ring the opening bell at its new venue in the same Chicago Board of Trade building at the foot of LaSalle Street, where the options market got its start in the 1970s and where the shouting and warm waving of open outcry ruled for decades, until computers mostly took over. On any given day, as many as 400 options industry professionals are expected to work at the new 40,000 square foot space, which is designed to accommodate the in-person trading still preferred by some customers of CBOE products that also trade electronically. That's cool. The new open outcry will be in VR. We will all be sitting with VR headsets, trading in VR pits, and punching our avatar. I think that would be the way to do it, dude. Right? Like the issue with open outcry, I think it makes perfect sense. Right? The issue with open outcry was you had to have all of this infrastructure behind you to like clear the trades. And you'd be like, you'd point to a guy and like, maybe he didn't see you, or I don't know. I've never traded on the floor, so I don't know exactly what the problems would be. But like, you know, there'd be these situations where you made a trade and you had to make sure that it was the right person that knew you got. I mean, it was just a mess. And I like actually thinking back or having it explained to me. It's crazy that it all worked, right? And there would be all these clerks. And the way that a lot of people got started was they would be a clerk and they would go and grab the ordered things from you and do all of this stuff, right? Okay. But the problem with electronic trading is that there's none of the interpersonal reaction. You don't get to talk to the other market participants and see what they're doing. You don't know who you're trading against or anything like that, right? So if you had a VR trading floor, you could solve all of those problems. You could sit there and you would be able to see all of the same stuff that I see on my screen here today, but also be able to see the other people that are trading and interact with them in VR and like yell and, fight with each other, punch each other and stuff like that. So I don't know what it would take to convince the CME that that's the way. I think it would take a lot, but I find it a very compelling idea. Yeah. Hey, we could get a copy of Unreal Engine and build one of those. You know what? I think if we're getting into like, hey, if I had more time, I would do producing. I think I'd probably be more likely to spend more time on my producing and DJing than I would on video game development, but that's what I wanted to be, was a video game developer, until I realized that the industry sucked. And hey, we could make a game where you're all a bunch of hedgehogs that trade at the CME, and it would be called Hedgehogs. You get it? Like a hedge fund, but they're hedgehog. That's my game idea. Is that their ultimate plan with the Google Cloud deal? You say so? When I was introduced to the inventor of virtual reality and asked if I could do anything with it, but in those days it was all Greek to me and I passed them. Maybe we can entice them to buy the tip. I have to say, I do feel with the current state of VR that the space has been way overhyped. I don't really enjoy being in VR all that much. I do not find it compelling compared to the real world. And I really don't want to spend large amounts of my time with a VR headset on my face. There are people that do that, but like it's a niche thing. And I think that that's probably more appropriate. This idea that like everybody is going to spend their time in virtual spaces in the future that like Mark Zuckerberg has, I don't think so. Nope, I don't think so. VR's not that compelling. But it could totally make sense as, for sure. Here's the problem. Here's the biggest barrier to that. The institutional traders like that you can't see who you're trading against, right? Not being everything, markets moving to a completely anonymous market was to the institution's benefit and the locals' detriment. And that, in my opinion, is the primary reason why retail market making is basically completely collapsed and is not really a viable business strategy anymore. When it was in the 80s from floor traders, right? It's because they knew who they were working with and they could build relationships. That's really what it was that enabled them to develop an edge. All right, well, we talked about so many different things today. I feel so ADHD, but yeah, I had fun. I had fun. You know, I guess part of the reason why I'm feeling like I had fun is because I didn't lose any money today again. Like, I haven't made any money this week, but I haven't really lost any money this week, so that's good. And I did take trades. It's just they didn't really go for me. So I'm okay with it. And I will probably, I don't know if we're gonna have a full stream tomorrow. Strong reversal. Yeah, the strength of this reversal, given the context, is really quite surprising to me. But we'll see. This trade that I'm trying to do here in the treasury is something that like I got to keep on for like a month or two, right? This is like I take this off in September. I kind of want to be able to get a position like that in the micro treasuries too, but I don't think that I ever will. I'm not willing to take that much adverse excursion against me for that trade. So, yeah, but anyways, I was saying tomorrow, I'm not sure what's happening with the stream because I don't know what time I'm going into the hospital. Okay. But hopefully we will have a stream and maybe it might be a shortened stream. I don't know. I'm still going to be around, so check out in Discord and so forth. But it's time I get going and get ready for my work meeting. So I will see you guys tomorrow. In the meantime, stay profitable, friends, or at least don't lose all of it.